Everybody, just setting up the live right now to go over RH earnings. And just be a couple minutes. And let me know if the audio is fine. All right. So, I'm just going to hop on and check. Can you guys hear me right? Is the microphone fine? Is the audio good? I don't know if it comes up on here. I have to check on. We got. Hello? Hello? Can you hear? Okay, it's fine. I hear it. I just double checked it. All right, guys. So let's do this. Let's just hop right in. We're going to be going over RH earnings. RH earnings are going to Restoration Hardware. We're going to be going over the earnings, but the earnings are coming out after the market close, so we do have some time. It's 3:31 right now. We're going to be on here till after 4 o'clock when market closes. Earnings will come out. This is a pretty new software for me, so hopefully it works fine. But basically, we're going to go over the stock, some expectations, some things about it before the market closes, before the earnings drop. And then we'll take it from there and go over the earnings in real time, see how they are, see how the stock moves, all of that. So let's just start with the fact today. I mean, the market was great today. As you can see, Dow was up almost 1%, S&P up 1.2, NASDAQ up 1.9, Russell 2000 up 2.5%, RH outperforming before earnings up 4.7% today. If anyone's following me on Public, on the app, that's like a brokerage app, I do share like trades I'm making on there now. Started it about 2 weeks ago. I've been buying RH up basically the last week. I think it got as low as, I want to say it was like 325. Yeah. So right here, it was like 325. I got in the 320s, luckily. So around the bottom, 52-week low was 320 flat. I think I got it at like 326 or something. It's at 384 now. So stock has come up in the past week quite significantly. I mean, last 5 days, it's it's up. Hold on, sorry guys, but let's just go over the fundamentals. Let's talk a little about the company and get as much as we can in before the earnings drop. So the company is worth $8.25 billion of market cap. It's got a PE of 17, so it trades for 17 times its earnings. That is high for a furniture company, but I don't believe that RH is a furniture company. They're trying to transform their company into something much more, a bigger luxury brand. So I'll give you my kind of thesis on what the company's doing from past earnings reports, from how the management talks about the future for this company, et cetera. Basically, RH is trying to be a luxury brand, and they switched their name from Restoration Hardware to just RH specifically because they don't want to be known just for the hardware portion. They have, a lot of people might not know it, but they have two jets that are for charter, RH1, RH2. So two jets that they've built for charter, and they have a yacht, RH3, it's called, also for charter. They have lots of restaurants. Some people probably already know that now. In all major cities, not all, but in a lot of major cities, they have restaurants. So I'm actually going to, since we're screen sharing, I'm going to just show you. If we go to rh.com, you can actually see on the bottom of it. So obviously you get the furniture up front and everything, but if you scroll down to the bottom, you'll notice RH New York. Now this was, there's a movie about it and all that, but the top of it is this beautiful restaurant. And all these places, RH Chicago, RH Boston, all these like beautiful places that they designed to not only show their hardware, but also that you can go in and you can eat. For most of them, like you can see restaurant menu, says it right there, and all these things here. And they don't all have restaurants, but a lot of them do now. And it's just a totally different, experience. You can sit anywhere there. It's like, think like you go to Starbucks not just for coffee but to hang out, have, meet your friends, this and that. They're trying to do something similar but with a very high end luxury type of clientele. So they have these restaurants. They've talked about doing residencies, so they're trying to get into residential. They also have spoke about getting into um, besides residential hotels. So they're starting in New York. They're looking to do basically hospitality, the food, hotels, residential, and they're also expanding to Europe, which they haven't really done yet. They're starting, I think, with London. So basically, you have a company that is known for furniture in America, uh, and they're expanding to be this multi-luxury legged company that I think has the potential because their market cap's not that big. I was under 10 billion, like 8 billion or so. I think it has the potential to be a company acquired by someone like an LVMH. LVMH, for those not, uh, it's Louis Vuitton, Moet Hennessy. They own tons of high-end companies, luxury companies. Their stocks market cap is $371.25 billion dollars. So acquiring a company like RH would be nothing for them, an $8 billion company. So I think they are an acquisition target, especially as the stock has come down. If we just look at the stock, its 52-week high is $744, and now it's $385. And the $700 range is not that long ago. April 2021, it was a $700 stock. Now, if you're looking at the 5 years, this company, although it is down, this isn't a company that's just been going down forever. If you look at 5 years, this company has done very well. It's went up for many, many years, had an amazing run, uh, in 2020 after the market went down. As it came back up, went up like crazy. Everyone's moving, work from home, things like that. So a lot of people had to furnish their new homes, things like that. So that is the question is, did it go up too much and now it's pulling back because, that people have spent a lot of money furnishing? Are their earnings going to come down? Things like that. And that's what we want to look at when we look at their earnings report. So let me just see how many people are in here now. We got, all right, a few people. That's nice. And check the chat. Do they own real estate? So, Alex, thanks for coming in. As far as owning real estate, I believe they do own the buildings I don't know about every property, but I was watching, the video on the New York property. I believe they bought the building, they gutted it. They actually own the property and then they made it, designed it to show off their furniture, put the restaurant, etc. So I do believe they own the real estate. I don't know if they own all their real estate. I would think they do. I think they are buying the real estate, but, on a deal per deal basis, it's possible that, for example, there are RH stores in malls that they don't own the mall. They just are, leasing, they have a lease and they're renting. So, but for the big projects, I do believe they do buy those buildings. Um, Getting into, and if I miss anyone's comments and whatnot, I have the web page in front of me, so the comments don't really pop up. I have to kind of look at them here and there. Thoughts on the stock market, RH consumer spending correlation for this coming earnings report. So, I do think the stock market's taken a huge beating in general. I mean, you can see it with a lot of stocks, not just RH. RH is obviously trading, closer to the 52-week low than anywhere near its 52-week high. Um, a lot of stocks have taken huge beatings. Personally, I do think for many stocks, we are at a bottom. As the overall market, I don't invest in the SPY. I don't invest, in ETFs. I'm a stock picker. So I'm looking at individual stocks. I'm looking at their businesses, and I'm investing based on if I think it's undervalued stock or it's fairly valued, but with a lot of potential in the future to make it eventually look undervalued. So in this case, I think RH stock is undervalued, assuming that they can execute on these things because their TAM, total addressable market, is going from I don't know the exact numbers, but whatever it is, it's going from a furniture TAM of just selling furniture in the United States only to not only expanding and being okay, let's be a global player and move, expand throughout Europe, which they're doing, but we're also going to get into more luxury things, chartering jets, chartering yachts, getting into restaurants, getting into residentials. So, they're going to open residencies, getting into, hotels. It basically just turns this company into a totally different company. And that's kind of the thesis that when that all happens, an $8 billion company, they have the potential to be an $80 billion company if they execute flawlessly. And Obviously it's not going to happen, but they have the potential to be a huge multiple on what they are today if they actually succeed in these spaces. Now that is a big if. They have to succeed in hotel business. It's not an easy business. They have to succeed. But the thing is they have the brand. They are already their furniture is known for being high end and luxurious. So I think that they have a good chance. And the management, the CEO has a great vision. And he knows what he's going for, and he's been successful at so far implementing on the restaurant side. Referring to stock market performance, discretionary spending at RH for earnings report. So the RH earnings report, I mean, it's going to be a tough one to tell for this quarter. I'm talking right now general about the whole market, not the whole market. I'm sorry, about RH over the long run. For this earnings report, there's going to be a lot of random factors that we won't know how it comes out. For example, shipping prices, have probably went up a lot. How is that going to affect their earnings? Materials for making furniture and different things have went up. So the thing is, the last quarter, the earnings, you could have said a lot of the same things, and they did extremely well. If we just go to their, I'm just going to pull up here. If we just go to their finance, Yahoo Finance RH, just a simple way to check one thing. Sorry, on earnings, we can see right here quarterly. Let's break it down. They had $184 million in earnings in the last quarter, on $1 billion of revenue. They had 226 before that, 130 before that, 130. So they've consistently had good. If we go annually, 220 in 2020, up from 135 million in earnings in 2019 to 2021, going from 220 to 271. So, I think I am on the belief side that, keep in mind, in the last earnings report, they did fairly well, maybe not as well as some expected, but they did fairly well. And the stock was at a much higher price. So we're going into this earnings report with a much lower stock price than before. What's my largest holding? So to answer that, my current largest holding is actually Disney stock. And if you haven't seen my Disney streaming thesis video on my YouTube channel, I highly recommend checking that out. That's the main reason why Disney's become my largest holding. For the longest time, Tesla was my largest holding. I still hold Tesla. I still love Tesla. But I do really believe in Disney, but that's an entirely other topic that would take up, I could spend hours going over my thesis on that. So let's get back into RH. So it's 383. It's come up going into earnings. They do move. RH is a stock that does move pretty significantly up or down on earnings. The volatility on earnings have, I've seen pretty big jumps with them. So I wouldn't be surprised to see a big jump up or a big jump down. Now I can tell you, if the overall business for the long term, if there's going to be an earnings call after that, if the mission of the hotels, the Disney video is great. Sorry, just reading the comments. Disney video is great. Same with the hood video. Appreciate that, Alex. Thank you. If the long-term thesis for this company continues to be, executing on Europe, executing on the hotels, the residencies, and it stays intact and the stock drops because some increased costs going on right now, I will be a buyer. I'm going to be happily buying it, probably, in after hours. If it drops, I'll buy it in, tomorrow, depending on how much it drops. But in the 300s, when it's under 400 a share, assuming the long-term thesis is still intact, for me, I like it at these prices a lot. And it's just because there's so much opportunity, and I think they already have the brand to do it. If you're going to go out, and it's not like just saying, okay, let's go open a luxury hotel and just see what happens. You're opening it with a name that is already known, at least in the States, and you're a great management team that has built beautiful places already when it comes to their showrooms and things. So I am interested in it, and the truth is, at 17 times earnings, we're not talking about a expensive company. And here's forward PE 14.64. When have you ever been able to buy RH at a forward earnings of 14? You just haven't. Look in the past. 27 times forward earnings, 30, 34, 24. I can even pull up, let's see. earnings over time for RH stock. So, I'm going to say not earnings, my bad. I'm just going to say the PE ratio over time for RH stock. So let's just check this out and see. And well, this is the past year. Let's hit 5 years. At times, obviously, this is before they weren't making, they're barely making any money or whatever. So they traded at ridiculous earnings 400 times. But if you're looking at 2019, even, before that, 2018, this company usually traded at a much larger premium than it does today, 33 times earnings, 26 times, in the high 20s, most of the time, in the 30s, in the 40s, in the 50s, in the 60s. You're getting it under 20 times earnings right now. So I don't see it going down unless things go horribly wrong. I mean, it could go down. I'm not going to say it can. Obviously, it can go down, but I don't see like the multiple. That's what I should say. I don't see the PE for a company like RH with so many things that it's working on going in the forward to be a much lower than a 17 times earnings. Now, if they have less earnings, then the PE automatically goes up because they made less. But at current earnings, 17 times, and we're expecting earnings to get better going forward because of all this expansion. That's why the forward PE was like 14. So I do think that it's cheap. I really like the company. I think it's cheap. I think that the service and the quality for the company is great. I have RH furniture at the house. Uh, Sorry, I'm just gonna go through these comments while we can before earnings come out. We still have a good 15 minutes or so. You planning on keeping your Disney call options until they expire? What other stocks are you eyeing? So I trade a lot. Um, I'm not sure which options you're talking about because I've talked about a lot of different options in different videos. Every time I make a video, what I'm saying in that video is exactly what I'm having in that moment. But I do move things around constantly. I'm looking at the markets all the time. Right now, I have the largest percentage of my account in Disney that it's ever been, but it's not in the same options. It's mostly in stock, to be honest, because I'm really thinking I need to be in it for the long run and don't want to. Have any issues with that, but we're going to keep this mostly not about Disney on this one, just because it will. We could go really deep into that, but yeah, I have a ton more. I'm more convicted. I have more conviction than ever on Disney, but playing it a little differently than I was planning to play it before. So, um, so yeah, so RH. Let's just jump into their. I'm going to show you a couple things. We'll jump into their Q3, the last earnings report, just to see how things kind of ended. I think it's important to look at the companies other than major news coming out. And yes, I am playing RH earnings. Well, I'm not playing them. I'm not buying options for like the jump to see. I didn't buy options for this Friday or anything like that. So I'm not playing the earnings per se, but I am invested in the earnings because I own the stock and I do own a lot of shares in the company. So I do want them to go up. If they go up, I make money. So happy, I am betting on them going up, but I'm betting on the long run. I'm in shares, not in options when it comes to RH. So if we look at RH's, I'm going to throw this on the screen real quick. This is the last quarter earnings report, just to get an idea of, their shareholder letter to see how things, obviously, if you were a shareholder then and you're reading this, it looked pretty good. So hopefully it's going to be just as flattering, if not better, in this one. We see third quarter 2021 highlights. Uh, Third quarter's GAAP net revenue, it increased 19%, over $1 billion versus 844 million. Gross margins going to over 50%, 50.2 versus 48. And the 48 numbers that they're going against were already huge numbers in 2020, bigger than they ever were before. Here's the big one, though, operating margin. And this is something we're going to look at their earnings when they come out after market close around 4. They had 27% operating margin. This is huge versus 13%. Their operating margins off the chart. They're really taking home more cash than ever. And that is what we want to see. Are their operating margins going to remain high? Because that's going to determine how much money they're really making. Their net income increased 297%. that's when you have better operating margins, that's the kind of difference you can see. Versus so that it was 184 million in net income in that quarter versus 46 million a year before. So Q3 was obviously, I mean, great highlights. I'm looking forward to Q4. And they talk about things like here, the liftoff of RH1 and RH2, our customized Gulfstream G65ER and G550. It's going to be available for charter. The former already garnering press praise, featured in Architectural Digest, The Wall Street Journal, 20 titles of modern luxury, including Los Angeles Confidential, Manhattan Magazine, San Francisco Magazine, Boston Common, Dallas, Palm Beach, and Aspen Magazine, to name a few. So, as they're getting into these different markets, they're getting a lot of attention. Just looking at the comments again, you said buy calls. To be honest, I don't know what the calls are going for. I'll just pull on the side here on my phone to see what they're going for, if it's worth it or not. There's 10 minutes left. I'll just take, I'll give you my quick opinion before we do any more research or this or that before the market closes, because at 4 you won't be able to buy options anymore. I'll give you my opinion. I don't have options, and the stock's already up 4% today, so it's a little tougher. But I'll look at what they're going for, the premium, and I'll tell you my opinion if I was to get options, what I think about them, and then we'll get back into it. So it's $383 a share right now. If we're looking at the April 1st calls, let's see what they're going for in premium. So, look, it's $382.90 the share. If you did a 380 strike, for example, you got to pay $24 or so. So you're paying like $24 a premium. It's a lot for 1 week, but it's not a lot considering how much RH has moved in earnings. I wouldn't do it. I rather just buy the stock. $24 on 380 bucks. We're talking about 6% move. So the stock, it's already up 4%. It's got to go up another 6% if you bought that option, for example, just for you to break even. Anything above that, you start to make money. In my opinion, that's not a great deal, because if you're doing the option, you're really just doing it for tonight. You don't really care that much about the rest of the week. So, and it's not like you can't get a cheap option unless you're buying like, in the high 400s. And I wouldn't recommend that, because it's going to be completely worthless unless it shoots up huge. Buy 550 calls for May 20th. So, okay, so we can look at those. That's a different play. I mean, it obviously incorporates the option, going up. And then if it has good earnings, it kind of making its way up, and you could sell it obviously for a premium as it moves up at all. 550 calls for like $2.45. So something like that, in my opinion, I don't ever do it. I know people who do it. And can you make money? Of course, you can make a ton of money, but I just look at it as gambling, because I don't want that actual asset. Like, I don't want the right to buy RH for $550. I can buy it right now for $381. So I just, for me, I don't want that asset. I get the idea of like, hey, you don't have, if you don't have unlimited funds, you don't want to buy it and just hold it for what it is and buy as many shares as you want at 380. Then you say, okay, you only got to put up $250. And percentage wise, if by then it's much higher than that, then yeah, you can make a huge return as far as percentage. And percentage is all that matters. That's the truth. But the thing is, if it goes the other way, it's just worthless, and you can't hold it forever. You're holding it till May 20th, and then it's worthless. So if you want to risk a little money and take an option and just say, hey, whatever happens, who cares? I put a couple $100, put $1,000, put $2,000, whatever, and let it ride. You can do it. But every investment, I look at that as just, you're going to the casino. I'd rather buy the stock. If I'm wrong on this earnings today, then so be it. There's no rule that I have to sell it after earnings. I'm going to hold it until I'm right. As long as the long-term vision's right, I'm going to end up ahead if I'm willing to hold it. And I'm willing to put big money behind it. If I'm willing to buy, let's just say $200,000 of this stock, I'm not going to put $200,000 on a 550 call, because if I'm wrong, I lose 200 grand. I don't want to lose 200, and I don't really care to make 1,000. So I'm not trying to just, for someone like me, I don't want to put what I'd lose, and I don't want to, it just makes a lot more sense to not pay the premium for someone like me. I'll buy the stock and I'll sit with it. You said you have many contracts on this. All right. Well, dude, I'm rooting for you, risking a lot. Wish me luck. Lots of luck, man. I hope it works out. For all of us, if it goes up, I'm going to make money. You'll make money. It'll be great. What I will say to you is if it goes up and you double your money while it's not that, while it's nowhere near, like, let's say it doesn't get to 550. Let's say it goes from 380 to 420. That option is going to be up quite significantly, hopefully. Uh, and if I were you, I would take that money and sell it and not hope it keeps going up past the 550. It very well could, but take the money and put it in something else if you win overnight. That's my opinion, though. Thoughts on buying Disney Leap call options, January 24th. All right, we got 5 minutes till market close, so we'll talk about whatever you guys want, and then we'll just go into their earnings. Disney Leap. So I love Disney, as you guys know. 2024 calls. I love them. They do have more premium now than they used to. When I was buying originally, the first options I was buying in Disney, I don't know exactly how long ago, but there were no premium. When it was $170 stock or whatever, $180 stock, if you wanted to get 2024 calls, there was no premium at all. It was like, why put the 180? You could buy an $100 call or something and put the 80. It'd be like a 10 cents of premium for 2 years. So I loved Leaps in Disney, but obviously since then the stock has come down a lot. If we're looking at 2024 Leaps, just to give you an idea, strike price $100, for example. I like to go in the money. I don't go out of the money because I want most of my money I'm investing to be intrinsic value. So intrinsic value is, for example, the $100 2024 call is trading for around $51. 50 to 52.45. So the stock is 142. If you pay $52 for a $100 call, you're paying $10 more than the stock price. So $42 of that $52 is intrinsic value. And I want most of my money to be intrinsic value. I want the leftover I'm paying to just be the premium to be as little as possible. That's why I go deep in the money. I don't mind putting more up front to have a better deal and have more of my money just safer. So do I think that's a good investment? $8 of premium to, the way you look at it is it's not $8, by the way, on $142 stock. You're paying 52 up front. So all you're borrowing is the $100 you'll have to pay later for the strike. So $8 on $100 is 8%. So, do I think 8% is too high of a premium or too low? Is it a good premium for 2024? Well, I mean, you have 2 years, so let's break it down to about 4% a year. It's a strange thing to look. I don't think it's expensive because I think they're undervalued, and I think you'll make more than 4% a year on Disney stock. So I think you will end up ahead. Let's just assume if the stock's at $200 or higher by 2024, which I think it will be, you'll more than double your money. You're not going to double your money at 200 if you buy it at 142. So I do think the option's a good option. It's a good way to leverage. But my thesis on Disney, which we're not going to get too deep into, RH is picking up volume. Let's look at that real quick. I'm in for $500 calls. All right, let's look at real quick RH. But the issue is I'm in Disney for something that might take longer than 2024. I'm in it for something that is a much longer thesis. So we have RH. It was up before around 382. It's almost 384 right now, up 4.46%. Let's check out that volume. And I'm curious what the volume today versus average volume, 579,000, and it's over 1.5 million volume today. So obviously a lot of shares move in hands today, more than around 3 times the average volume. So it's 359. Market's about to close. We're going to get these earnings. It's going to be hopefully good. We'll keep an eye on the stock. We'll see how that moves into earnings, and we'll keep an eye on their earnings page. Let me get the earnings page up so we can jump right into it. Let's see. All right, so quarterly earnings. Hold on. I'm going to pull it up on the screen for you guys. So you know what I'll do is I'll leave the stock ticker here for you guys to see. so that you don't just see me constantly refreshing the earnings page. But the moment those earnings drop, I'm going to pull them up onto the screen for you guys. If anyone, and I'll make it so I can see the comments as well. So if anyone does see the earnings drop before me, you could let me know, and I'll jump into them. And while we're waiting for that, you know, I'll just give you that to those that were asking about the Disney options. I think you could definitely make good money doing it. In my opinion, obviously, not definitely, but I prefer to just own shares, not put up the premium, um, and keep dollar cost averaging and buying more and more as you can get them for the right price. Because I'm betting on something that could happen in 2023, but it could happen in 2026. I really don't know if you looked at my thesis when it's when the uh, the scale of streaming is really going to start hitting earnings in a huge way. But from my research, the numbers don't lie, and I think Disney will get to those numbers, and then it will turn to a behemoth compared to what they are right now. And they're already a behemoth, but their profits will be ridiculous. What do I think? Let's see. What do I think EPS will be? So, um, I didn't play out a sheet for this earnings, so I'm not just gonna BS you or anything. I didn't pre-plan what I think their EPS is gonna be specifically. Um, I'm like I said, I'm in it not for this earnings report. I'm in it for thank you for sharing your thoughts. I appreciate it. Problem. Earnings are gonna come out, by the way, any moment. It's 4:01 right now. I'm refreshing their earnings page. I know you guys don't see it, but I'm letting you guys see the stock action moving. So let me just make sure that there, just so you can see it's stock's down around 1%, but that's just typical movement because it shot up. It's 5% closed. Uh, Typical movement while earnings haven't dropped yet. We're all waiting on them. Now, I don't know what the EPS, like I said, is going to be exactly. I don't have a prediction on EPS because there's a few just factors that make it really hard to tell, like with costs. Um, I'm just going to analyze what it actually comes down to and take management notes into consideration and see if the long-term thesis stays intact for what they're building. So still loading this up. They haven't dropped yet, not that I can see. I also have CNBC in the background in case sometimes you never know they can pull them. I usually pull it up and see it way before it's on live TV, but you never know if they just drop it. I have that there. And we're like 33 minutes into this. So I appreciate everyone who's stayed in here and going to watch this with me and going to check these earnings out. Is everybody in here in some way or form invested in RH by any chance? You guys own shares, just options? What do you guys have? Throw it in the comments. I'm curious to know. Or if you're just here for to learn about the company and check out the earnings and maybe decide if it's worth getting into for the future. Let's see. Still nothing. They are going to have a earnings call, obviously, after around 5 p.m. So since the earnings call, yes, we all in calls. All right. Nice. I'm hoping for all of you. Let me just let the calls work out. That'll be great. Stock and after hours basically flat right now still. Everyone's waiting for this. So let's see what you said. Dropped $30 on the money calls lottery. All right. Well, let's see what we can turn that $30 to. What time earnings? So earnings, they can drop them technically whenever they want after hours. They can drop them, but usually comes out pretty soon after hours. It's 4:03 p.m. Right now, Eastern time. They could come out any minute. They're going to come out sooner than later because they have their earnings call at 5 p.m. and everyone, they usually give everyone enough time to go through the earnings, be ready to ask questions that they want to ask for the analysts after the earnings call. And so I'm expecting them literally any minute. I'm just refreshing the page until it drops. And once it drops, it'll be great. I'll throw it on the screen and let's check, refresh this. Stock's up another 0.4% in after hours. So that's nice. 388 so far. So that's great. Keep an eye on the stock at the same time. And yeah, I mean, this is fun. I haven't really done a live earnings report. I'll usually, when the earnings drop, I'll just throw them all into like a keynote and record it all and do a voiceover and throw it on my YouTube page for you all. But doing it this way is just, it's pretty cool because we can interact with comments and whatnot. And hope you guys are enjoying it as much as I am making it. All right. Hopefully this comes soon. So Micron, just so you guys know, if anyone's in that, EPS beat $2.14 versus $1.97. So Micron did get a nice beat in earnings. A lot of the chip makers doing really well. Not on stock wise, but their business. Will be interesting to see how they do when all the capacity's in both. More puts. Interesting. So you are betting that it goes down, huh? But you're all right. The stock, just so you guys know, 393 right now, up another 1.7% in after hours. So stock is moving in the right direction. Does someone know something? Is it already out? I don't see it out yet, but clearly it is moving. You're seeing 388. Let me see. I'm going to refresh it. I'm seeing 393. I'm just going to throw RH stock. I'm just going to look it up real quick on Google, see if anything's different. This isn't showing for whatever reason. I don't know why that's not showing after hours, but it should be. It's weird that it didn't. And I'm seeing 405. It must have dropped because it's up 6% in after hours, guys. Look at this, 409, 413. This stock is going up. 420. You guys, with these earnings, with these options, up 10%, 422. We're going to go over those earnings, but wow, you guys are going to hopefully make a killing now. Obviously, it's not that 450, but you guys are going to be making big percentage gains. Take the money. Take the money on those quick short-term options. All right, let's do this. Let's check. Earnings are out. Let's go over them. You guys can keep us updated on the stock price while we do that. Let's see. Q4 financial results, shareholder letter. RH 3-to-1 split. Let me see. I saw that in the comments. Let's go through this real quick. All right. RH reports record fourth quarter and fiscal year 2021 results. Record. I like how this is starting. Fiscal 2021 highlights. GAAP revenue. So this is 2021 as the whole. GAAP net revenues increased 32% to $3.759 billion versus $2.849 billion. Huge gain right there. 32% for the year after already an amazing year. GAAP operating margin increased 830 basis points to 24.7% versus 16.4%. I'm just going to skip real quick and let's just look what was the GAAP operating margin in the quarter. It was 24.1%, so still great margins. All right. GAAP net income increased 153% to $689 million versus $272 million. Huge increase for the whole year. GAAP diluted EPS increased 122%. Huge increases to $22.13 of EPS instead of $9.96 for the year. Now, fourth quarter, this is the quarter we were caring about. Revenues increased 11% to $903 million. So it is under $1 billion, but still amazing. $900 million, even with all, with everything going on. People thought that it was going to be not as great with, everyone already moved to new houses. They got the furniture they wanted. People are still buying furniture and still spending money at their places versus $812 million. GAAP operating margin increased 150 basis points to 24.1% versus 22.6%. So they are still continuing to have great operating margins. GAAP net income increased 13% to $147 million versus $130 million. And GAAP diluted EPS increased 14% to $4.91 versus $4.31. So real quick, before I get into the rest, let's quickly just look where the stock is at. Stock is at 380. Is that right? Let me make sure. Sorry, guys. Oh, man, and I think I've had the wrong page up for you guys. I'm so sorry about that. Let me throw the right page up. I don't know how that happened. All right, this is the right page. Let's real quick. Before we get that split news is awesome. I didn't get there yet because I'm trying to just manage this all for all of you guys real quick, but let's just get there. Let's get into this. Now you guys should be seeing what I'm seeing. All right. To our people, partners, shareholders, we're pleased to report another record of results. Net revenues increasing 32% to 3.759 billion versus 2.849 billion a year ago, up 42% versus 2019. If you exclude money losing online businesses, it represents one of the highest 2-year growth rates in our industry. So very good. I'm going to make sure just so I can see any if you guys are commenting. It's 350. It's at 358. Oh man, what happened? Let me just double check if that's what is that where we're at, guys? 358. I got to read the rest of this and see why, if that's the case. You guys got me. Oh, wow, it is 356. What has happened? Let's read the rest of this and see what management is talking about to make this happen. All right, so demand versus 2019, it grew 49%, which resulted in an incremental backlog at the end of the year of approximately $200 million of net revenue that we expect to fulfill over the course of 2022, meaning that they're still fulfilling demand and backlog, which is great for, we know 2022 is going to have good numbers, hopefully then. RH continues to set a new standard for financial performance in the home furnishings industry, and our results now reflect those of the luxury sector as adjusted operating margin reached 25.6% in 2021, up 1,130 basis points versus 2019, reflecting the strongest 2-year growth in our sector. Our performance demonstrates the desirability of our elevated and exclusive product range, the connective power of our evolving ecosystem, the profitability of our fully integrated business model, the significant strategic separation created by our inspiring physical spaces for the second half of Q4. For you guys saying what's happening, I really don't know yet. That's what I'm hoping we'll figure out. It might be about guidance, as usually when a stock goes up big on good news and then it drops, it's usually because of guidance, but we're going to see if that's what happened. Let's get through this. So they generated 97 million of free cash flow in the quarter, 477 million for the year, inclusive of a $191 million increase in inventory, of which approximately 60 million is due to increased transit times and the balance targeted to elevate our unshipped to demand backlog. We ended the year with 90 million of net debt and nearly 2.2 billion of cash on their balance sheet. So 2.2 billion of cash, just 90 million net debt. Net debt includes cash versus debt. So they do have a little, $90 million of debt even after cash. While generating return on invested capital of 73% in 2021. That is a huge ROIC. People don't realize that. 2022, the year of the new. As we've mentioned, while many of our plans were delayed by the virus, they were not disrupted by it. We used these 2 years to reimagine and reinvent ourselves once again. They believe 2022 will mark the beginning of the next chapter of growth and innovation for the RH brand. 2022, the year of the new, will include the opening of RH San Francisco at the historic Bethlehem Steel Building, our most extraordinary new bespoke gallery to date, the launch of RH Contemporary, the most compelling and potentially disruptive product introduction in our history, the elevation and expansion of RH Interiors and RH Modern, inclusive of new collections and enhanced quality, the unveiling of our first RH Guest House. For those that don't know, Guest House, that means hotel. RH Guest House in New York is their first hotel, basically. A revolutionary new hospitality concept for travelers seeking privacy and luxury in the $200 billion North American hotel market. It's not global. $200 billion is the North American hotel market. This is an $8 billion company just getting into hotels as another part of their business. This is why I'm so bullish on this company and what it can be. The introduction of 2 new culinary concepts as elevated live fire restaurants opening in San Francisco, England. There you go. That's, part of the expansion to Europe. And the New York Guest House, plus a champagne and caviar bar also opening up in New York Guest House this year, with plans to expand both concepts to our future galleries in Paris, London, Milan, and Aspen. If you guys don't see this, Paris, London, Milan, they're not in Europe yet. Imagine the numbers after they take over Europe too with this, with average restaurant volumes approaching $10 million annually. Their average restaurant makes, I don't know about you guys. I've been in the restaurant business. My family has restaurants. Their restaurants are making $10 million annually average. This is a lot of money for a single restaurant. They have multiple. And a very profitable 4-wall model. We are making significant investments to build a world-class hospitality organization and see endless opportunities to elevate and activate our places and spaces, creating integrated and inspiring experiences for our members and customers that cannot be replicated online. So they talk about this. A lot of people are, talk about, oh, but how's the online business, things like that. They're building experiences that they're basically saying this is an experience you can't replicate online, and that's good. They don't want it replicated online. That gives them an edge. It's expensive to compete with them with what they're doing, which gives them a moat. So where were we? Hospitality can't be replicated online. There we go. The debut of the World of RH, the first phase of our new digital portal highlighting the connective power of our evolving ecosystem of products, places, services, and spaces, all designed to inspire customers to dream, dine, travel, and live in a world thoughtfully curated by RH. We'll create an emotional connection with our customers unlike any other brand in the world. If you don't get it yet, I mean, does this sound like a furniture company? I mean, I don't hear any other furniture. You never heard IKEA talking like this, maybe Swedish meatballs they got for food, but you're not hearing any other company talk like this. This is why I do believe this is an acquisition target. This sounds like a company that belongs under LVMH. So the liftoff of RH1 and RH2, our customized Gulfstream G60 and G550, will be available for charter later this year. So it's important to note, they've announced these things. They're not even available for charter yet. It's saying later this year, which means all the money, they've spent the money already to make them. Well, now they have to be monetized. The money coming in is in future earnings reports. The former has already generated press and praise as featured in the pages of Architectural Digest, Wall Street Journal, 20 titles of modern luxury. The christening of RH3, our luxury yacht, that will be available for charter in the Mediterranean and Caribbean. RH3 will be featured in the Robb Report, Sea Magazine, and Boat International over the coming months. So that's another big thing. The continued rollout of RH in your home, a unique and memorable delivery experience with brand ambassadors guiding every detail of the delivery and extending the selling experience into the home. The expansion of the RH brand globally, beginning with the opening of RH England, the gallery at the historic Idaho Park, a magical 17th century 73-acre estate in the English countryside that will introduce RH to the UK in a dramatic and unforgettable fashion. Additionally, we've secured locations. That's important. They secured locations for galleries in London, Paris, Munich, and Dusseldorf, and they're in the lease or purchase negotiations for galleries in Milan, Madrid, Brussels, and France. So that answers earlier question. Here it's saying lease or purchase. So some properties they're lease, they make deals. Some they decide to purchase. It's a mix. The opening of RH Palo Alto, the gallery at Stanford Shopping Center, which will represent the next evolution of our highly productive prototype galleries. Now, business outlook. So I haven't read this yet. We're doing this live together, but everything I've read has been great. So if the stock, which we're going to just take a quick look at it, where it's at now, it's at 353, down 8.5%. It must be the outlook. I mean, I really wouldn't know whether, that it seems like that's what it has to be, but let's see what it says because it's important. While we enter 2022 with confidence that our effort will continue to elevate the expand of the RH brand for years to come, so the long term, we also recognize there are several external factors. It's going to be expenses. This is what I was worried about, such as record inflation, rising interest rates, and global unrest that create uncertainty. Although we lack the ability to predict economic outcomes on a macro scale, we do have the business model, strategy, and balance sheet to take advantage of opportunities that may present themselves, whether it be during times of economic expansion, contraction, or dislocation. While first quarter sales and margins trends remain healthy, so that's good. They are remaining healthy due to the ongoing relief of our backlog. We have experienced softening demand in the first quarter that coincided with Russia's invasion of Ukraine in late February and the market volatility that followed. See, that's where that's probably where the stock started to turn on that one sentence right there. They're saying, they've experienced softening. Well, how much softening? That's the question. And how long? We believe it's prudent to remain conservative. And this is something, though, good about the company. I rather them be conservative. I rather them tell us things not as good as they're going to be and then beat expectations. You don't want a company that overpromises and then fails to deliver. You want a company that stays conservative and exceeds expectations and then gets to raise guidance later. We believe it's prudent to remain conservative until demand trends return to normal and are providing the following outlook for the first quarter and fiscal 2022. First quarter net revenue growth in the range of 7 to 8%. So, right off the bat, let's just say this. Even with softness, they had a record year. They still expect to grow. Now, obviously, it's not big growth. 7 to 8% is not a big growth. I think that they are sandbagging it. That's my opinion. I think that they're going to grow more than that. They want to beat. Their management is not, messing around. They want to show good numbers, and when they give numbers, they want to beat numbers. But I'm happy with, at a 14 times forward earning, at a 17 times PE right now, growth is great versus 78% last year. So that's the huge difference. Last year they grew 78%. And now they're saying, hey, in the next quarter, we're going to grow 7 to 8%. So a much lower number. But they are going to be building out huge businesses to come for massive growth for many years. So this doesn't worry me. With adjusted operating margin in the range of 23% to 23.5% versus 22.6%. So basically saying their operating margin still going to be higher than what it was. And in my opinion, also, they want to put numbers they can beat, I believe. So they did higher than this, in the most recent quarter, and I expect that they'll, this seems about right actually margin wise for the first quarter. I wouldn't doubt that, but I do think they'll grow a little more than the 7 to 8. And what's really going to be interesting is the long term. So growing even in the face of some difficult things and expenses. Fiscal 2022 net revenue growth in the range of 5 to 7%. So they're saying for the whole year, 5 to 7% growth versus growth in their revenue versus 32% last year. As a full year, not just in Q1. 5 to 7%, same thing. They're saying 7 to 8% for Q1, while they're saying 5 to 7 for the whole year. I think they're sandbagging it. This is, I have no doubt. We're going to keep reading, but I have no doubt this is the reason the stock is down, in my opinion. 5 to 7% is not attractive when you just saw 32%. But what analysts fail to realize, because they're so short, minded, they don't think about the long term. They're always sitting there worried quarter to quarter. They have to make sure they don't mess it up in the next 30 days. Well, in this case, in the next year, it doesn't. But the thing is, you have a company growing still, huge growth because of this big transition that happened. And what could have happened, which happened to a lot of other companies through 2020 that had this huge growth in gaming and all these things, what we saw was a pullback and actually lower revenues than they had. And they say, okay, well, look, it's lower revenue, but it's higher than pre-pandemic. It's higher than 2019 revenue. It's just not as high as 2020. It's just not as high as 2021 or whatever. They're going to have higher revenue after amazing growth. They're going to do better. So this is a good thing. And this is while they build out tons of new things that I think the growth is going to be. One, I think 5 to 7. It's going to be more than that. You can mark my words on that. I think they'll have more than 5 to 7. And then you take into account the chartering coming online. You take into account, which is going to add a lot of revenue, even if it's not operating at high margins. It's going to add a lot to the revenue. You take into account the new restaurants. You take into account the more stores for people to see the furniture, to buy more, the expansion to Europe, the hotel opening. That's huge revenue. I think that we're going to see a lot more than that. This is the disappointment, though. Our outlook is inclusive of opening RH San Francisco in late spring, the RH Guest House in early summer, so early summer for that, RH England in mid to late summer, and RH Palo Alto in the fourth quarter. Now, you guys tell me this. If RH Guest House works, if the hotel works and they're making money, and they say, you know what, this actually worked, our brand works, people like our hotel, great service, what do you think happens next? Expansion of hotels. So that means, and that they're only talking about RH Guest House in New York. That means the next earnings reports, we have surprises of, okay, we found a location for the next hotel. We found another location for the next. There's a lot of good things to come. RH business vision and ecosystem, the long view. So the fact they even say it, the long view, this is exactly what people need to be taking. You got to take the long view if you want to own this stock. That's the way I'm looking at it. That's why I'm holding stock. I'm in it for the long run. And I think they're going to execute. We believe that there are those with taste and no scale, and there are those with scale and no taste. Now, if there's, scale and no taste, I'm going to just look and call it IKEA right there. You have And then the idea, what they're probably going to say, and the idea of scaling taste is large and far reaching. But that's what they're saying they're going to do. They want to have huge scale and be high end and have high taste. Usually when you have huge scale, your quality goes down. They want to have the best quality but be massive. And I think that, that's that is a good goal to have. Our goal to position RH as the arbiter of taste for the home has proven to be both disruptive and lucrative as we continued our quest to build the most admired brand in the world. Our brand attracts the leading designers, artisans, and manufacturers, scaling and rendering their work more valuable across our integrated platform, enabling RH to curate the most compelling collection of luxury home products on the planet. Our efforts to elevate and expand our collective will continue with the introductions of RH Contemporary, RH Couture, RH Bespoke, RH Color, RH Antiques, Art and Artifacts, RH Atelier, I'm not sure, and other new collections scheduled to launch over the next decade. So these are a bunch of collections that haven't even launched. Some of them, there's RH Modern, there's some of these, but Couture, Bespoke, Color, Antiques, and Artifacts, these are ones that haven't even launched yet. Irvin writing, why is RH down? So my opinion, I could be wrong, but my opinion on why it's down is because of the 7 to 8%, which says right here, they're expecting, 5 to 7% for the year of 2022. So basically this whole year, they're expecting a 5 to 7% growth rate in revenue. And when you just came off of a year where you had 32% growth, the market doesn't like seeing that. But they're doing better than they were doing. They traded a fair multiple, and they're expanding into huge markets that could make this, the thing is, an analyst that works for a bank or a firm is not looking to hold a stock that is working on something that is not proven yet. They aren't a proven successful hotel chain. Let's just be clear. They're proven that they have good high-end furniture. They're not a proven they have proved themselves that they can make great restaurants that do $10 million in revenue a year per restaurant on average. They have not proven the restaurant concept. They have not proven the expansion in Europe. So it is not analysts that are not playing with their own money that take the risk and saying, let's buy into a stock that is currently mainly a furniture company that is trading at a higher PE than other furniture companies because they value it like a furniture company. It's the same thing. When I invested in Tesla a bunch, everyone looked at Tesla and said, it's a car company. I looked at it and said, it's a computer on wheels. You're missing the picture. And it's the same thing happening here. This isn't a furniture company. This is a global luxury brand. And that is going to get into many things. You take other companies, just look at Hermes. Hermes is not even in as many things as this, in my opinion. But I'm just going to show you right now. I'm just going to pull it up while we're talking. Hermes stock, and this is something he's brought up in a past earnings call, I think. Hermes is 136 billion euro, so more than $136 billion market cap company. RH has the potential to be huge. And but it's not a quarter by quarter thing for it. It's a 10-year, it's a decade plus vision. An analyst will lose their job if they're wrong in the next 2 quarters. Sometimes you never know. They don't want to get fired. They don't want to underperform the S&P. They don't want to underperform and lose their job. So they have to do things that they think are going to win in the short run. And they don't need to they don't need to get 10xers. What they need, analysts, is to just beat the market. They want 5 to 10% a year, 7% a year. I'm not looking to invest in a company that's just going to make me 5% a year. I want a company that I don't care if it gets hurt for a quarter, 2 quarters, 3 quarters, even a year. I can sit with it. I sat with Tesla for 2 years before it did anything. And then it had a massive run. I want a company that's like RH, that's an $8 billion company that is fighting to be an $80 billion company where I can get a 10x. And I think they have a chance to do it. So that's the thing. That's why it's down, because they are focused on the short term instead of the long term. So our plan to open immersive design galleries in every major market will unlock the value of our vast assortment, generating revenues of 5 to 6 billion in North America and 20 to 25 billion globally. Do you see this? They are writing this in the earnings report. This is the crazy thing that analysts don't even see. They are writing that they're expecting 20 to 25 billion globally in revenue. The company's worth 8 billion. That means 3 times their entire market cap in annual revenue is what they're planning on. And this isn't like, "Oh, I this isn't the end." When they hit that, what do you think comes next? They're gonna keep expanding, they're gonna keep getting bigger. So, they have huge goals. They're expecting almost the size of their whole market cap in just annual revenue for North America. Our strategy is to move the brand beyond curating and selling products to conceptualize and selling spaces by building an ecosystem of products, places, service, and spaces that establish the RH brand as a global thought leader, a taste and placemaker. Let me see. I see you guys are someone's commenting. You think my April 14th calls are going to zero? Can you write me? Can you write in the comments what the calls were? What strike price for the April 14th? And look, anything can happen. There is still an earnings call at 5 o'clock and 30 minutes from now, where stocks. I've seen stocks make huge moves based on what management has said during the earnings call and what management, how they answer analysts. And if a question comes up that no one's expecting, and then you get a wild answer, anything can happen. So while you're writing that, let's keep this going. Our hospitality efforts will continue to elevate the RH brand as we extend beyond the four walls of our galleries into RH guest houses, where our goal is to create a new market for travelers seeking privacy and luxury in the $200 billion North American hotel industry. Additionally, we are creating bespoke experiences like RH Yuntville, an integration of food, wine, art, and design in the Napa Valley. RH1 and RH2 are private jets, and RH3 are luxury yacht that is available for charter in the Caribbean and Mediterranean, where the wealthy and affluent visit and vacation. These immersive experiences expose new and existing customers to our evolving authority in architecture, interior design, and landscape architecture. They're putting themselves, exactly where they want to be amongst all high end. This leads to our long-term strategy of building the world's first consumer-facing architecture, interior design, and landscape architecture service platform inside our galleries, the RH brand, and amplifying our core business by adding new revenue streams while disrupting and redefining multiple industries. They want to change how you think about things, and they did that with the restaurants in a way. I highly recommend, if there's a restaurant in your area, take someone nice, go out there for a day, just see what it's about. Our strategy comes full circle as we begin to conceptualize and sell spaces, moving beyond the $170 billion home furnishing market to the $1.7 trillion North American housing market with the launch of RH residencies. So this is what I was talking about before. They plan to get into residential. Fully furnished luxury homes, condominiums, and apartments with integrated services that deliver taste and time value to discerning and time-starved consumers. This is a huge business, a massive business that they have no part of right now, just to be clear, zero part of. But they plan to compete in it. They make the highest end, best furniture for homes, in my opinion. Why not furnish homes and rent them out or sell them? Work with home builders, figure that out. They are tastemakers. That's what they're saying. So, I think it's a huge business opportunity. The entirety of our strategy will come to life digitally as we launch the World of RH, an online portal where customers can explore and be inspired by the depth and dimension of our brand. So basically a one-stop shop online to kind of see everything about RH, called the World of RH. Our authority as an arbiter of taste will be further amplified when we introduce RH Media, a content platform that will celebrate the most innovative and influential leaders who are shaping the world of architecture and design. So they're trying to also get into media. Now, I can understand why a lot of analysts might be doubting them and things like that, because they're not like, let's get into this one thing. Now, sometimes it is important to have a laser focus. You want to get into hotels? Do that and do it perfectly, and don't do anything else until you fully succeed there, and then move to the next thing. And that could be the way to do it. And they might be biting too much and they can't chew, that's the issue. They want to do so much. RH Media. I didn't even realize they were getting into media. I think I remember reading that in the last report, but I just kind of blew past it. I don't blame them. They want to own the whole market in a sense. They don't need to own the whole market, but they want to be part of the whole market. They want, when you think of the brand, you kind of think of everything around that brand and everything to do with luxury they take part in. And the good thing is, in a sense, they don't have to win it all. If the media fails, if the hotels fail, Well, as long as if one of them works or two of them works, they're going to see what works. And if all of them work, this is a huge home run. If just one or two of them work and the rest don't, and they say, okay, well, let's not do that anymore, but let's focus on this, huge businesses that they can be getting into. So our plan to expand the RH ecosystem globally multiplies the market opportunity to 7 to 10 trillion. So they're basically saying when you add in all the things they're doing, they basically have a $7 to $10 trillion TAM, total addressable market, one of the largest and most valuable addressed by any brand in the world today. A 1% share of this global market represents $70 to $100 billion opportunity. Now, the thing is, personally, I'm not a fan when people tell you, hey, if we just get 1% of this market, look how much money we'd have. I think, and I say this with no disrespect, I think that the CEO, the guy who runs RH, is a genius in the sense of design, in the sense of, he's going to make the product right. But I don't believe, he's not business operations guys. He might be, but from my hearing him speak and everything, he has the vision. He's a visionary in this. But like things like this, he's trying to impress by saying things like this. But the truth is, yes, it's true. $70 to $100 billion if you just had 1%. But it's like, if any of you watch Shark Tank or this or that, it's like, don't tell us, what it could be. Your whole company is $7 billion. One day it could be this, it could have this if you get that. And it is important to note it, but I think he is focusing a little too much on how big each one of these segments are. I don't think he's going to have 1% of all the segments. I think he's going to have more than 1% of certain segments, and he's going to do extremely well in them. But I don't think he's going to have all the segments. But you can't blame him for trying. So let's go on. Our ecosystem of products, places, services, and spaces inspires customers to dream, design, dine, travel, and live in a world thoughtfully curated by RH, creating an emotional connection unlike any other brand in the world. Taste can be elusive, and we believe no one is better positioned than RH to create an ecosystem that makes taste inclusive, and by doing so, elevating and rendering our way of life more valuable. Okay. Anyways, let's see what he said. Climbing the luxury mountain and building a brand with no peer. This is actually, let's see what this is. Every luxury brand from Chanel to Cartier, Aston Martin to Aman, Louis Vuitton to Laura Piana, Harry Winston's to Hermes was born on the top of a luxury mountain. Never before has a brand attempted to make the climb. And this is actually interesting. So he has talked about this before, how they have to get to the top. They weren't just born on top. Nor do the other brands want you to. It's a club to let other people join. We are not from their neighborhood, nor invited to their parties. We understand that our work has to be so extraordinary that it creates a forced reconsideration of who we are and what we're capable of, requiring those at the top of the mountain to tip their hat in respect. We also appreciate that this climb is not for the faint of heart. As we continue our ascent, the air gets thin and the odds become slim. 20 years ago, we began this journey with a vision of transforming a nearly bankrupt business with a $20 million market cap in a box of Oxidol laundry detergent on the cover of the catalog into the leading luxury home brand in the world. The lessons and learnings of the passion of persistence, the courage required, the scar tissue developed by getting knocked down 10 times and getting up 11 leads to the development of the mental and moral strength and builds character in individuals and forms culture in organizations, lessons that can't be learned in a classroom or by managing business. They must be earned by building one or by reaching the top of the mountain. Onward, Team RH, Carpe Diem, from the CEO. So what he's basically saying there, and it's a powerful way to end this, is that all these other brands that are luxury brands, he's right, they started as a luxury brand from the moment. And he talked about this in the last earnings call, or the last earnings report. He made a simple note also kind of saying how, it was a $20 million market cap company. It's an $8 billion market cap company. Everyone doubted them. They had laundry detergent on their cover, and now they're the leading highest end luxury furniture company. So, basically don't doubt us is what he's saying. Anyone who doubted us before, we had a huge return. And now we're looking to be in this, tens of $7 to $10 trillion market. And don't doubt us because we're going to get there, is what he's saying. So I'm not doubting him. The stock, let's just see where it is. I know it was down 372. It's down 3.5%. Keep in mind, it's not down for the, it was up 4.9%. It's up $18 during the day. It's down 13 after hours. Still up overall from, when I woke up till now. I will be adding. I love this stock under 400. I was like, when it was going up, it was great before. And I was thinking, wow, I made a good amount of money. But I was like, I don't know if I can add anymore. Part of me was a little worried. I was like, damn, if it keeps going up, I'm not going to be able to add so much more stock because it's still a good deal for the long run. But, it's always tough to buy when it was up 5%, it's up another 10%. No one likes to buy when it keeps just shooting up, but a lot of people are scared to buy when it goes down. I didn't see anything I don't like. Do I not like that do I wish it wasn't 5 to 7%? Sure. But of everything he's talking about building, does that scare me? At a 17 times PE? Not at all. This right here, under $400 a stock, I'm buying tomorrow. 100%. Stays under 400, I don't care if it's $399. I'm buying shares tomorrow. I'm telling you that right now. As far as everyone in this chat that has options, if you want my honest advice, assuming the stock, who knows what happens with the stock tomorrow. Obviously, if you're having options that are for May, that are, months out still, I don't think they're going to be down that much. Obviously, a lot of the premiums probably because of this earnings report. So they could be, they'll probably be down, but they're not going to be, I don't think they'll be zero. Let's just say that. I think if it was me, this is a long-term vision. I would take the money. And I hate to say it, you might not want to hear it, but I would sell those options, loss or not, regardless. If it's up tomorrow, awesome. You make a profit. If it's down tomorrow, I would take the L and I would buy stock and I would let that stock sit, let it become long-term cap gains where that one day when you sell it, you're only paying 20% tax. I would build a position. And if you're thinking, oh, but you know what? I don't have a lot of money. I only have $200. I only have $20. I want to, you only have $20. Why lose it? If that's all you have, if all you have is $100, then you really can't afford to lose it, right? The people who have plenty of money, they can afford to lose the $100. If you only have $100, why risk it? Don't try to make it 100 go to 1,000 real fast. You can hit, but more times than not, you don't hit. And if you're more, and that's how you stay at only having 100. Put it in the stock, buy little by little. We're already seeing it. It's coming green, as you guys can see. I'm going to throw it here for you guys so you see it. Stock is in after hours, not, it was down a lot. Now it's backing up a little bit. You guys can see right there. 388, 391 is coming up. 20 minutes now, they're going to talk. I'm sure he's going to convince people on the phone and tell them, hey, look, this stock, believe in us. We're going to do this. And if I were you, take your money, should be up. It went up in the last 10 minutes. So anyone who had options earlier today, you're probably already up. Take your money tomorrow. You saw what could have happened. It was down 10%. Could have tomorrow ended, where it was down 15%, or it would have been close to losing all of it or something. Be happy you haven't lost it all. You probably made money. It's up 1% in the market right now. You got time still on it. Take your money, put it in the stock if I were you, and slowly add with every paycheck. If you're not following me on public, by the way, my main account's on E-Trade. I use E-Trade, but I invested in a company called Public. They're a brokerage firm, like Robinhood, things like that. But you can follow people like a social media platform, and you can see when they're buying, and you can see the notes they're writing. So what I did is I decided 2 weeks ago to take a journey and say, you know what? I don't need to put, my large account is still in E-Trade. I'm not moving all my money over or anything, but I have cash flow from my businesses, my physical businesses that I own. And I'm going to take a little money every day, a couple $100 every single day. Ideally, when I first started, I said, I'm going to do it once a week on Mondays, but I'm having so much fun doing it. I've done it every single day, Monday through Friday. At least so far, it's been at least $250 a day just for fun, buying stock, whatever I think is the best deal that day. And I'm not selling at all. And if you want to follow me along on it, I'm going to be buying most likely, is under 400, which I don't know if it will. Stays under 400, I'm buying it tomorrow on public too. Probably buying on E-Trade as well, but I'll buy it on public too. And if you have an account, my name on it is Alexander Baton. I know you guys are following me on YouTube at FFM Research, but on public it's ALEXANDER, Alexander, and last name Baton, B as in boy, ITTAN. One for, straight Alexander Baton. Follow me every single day when I buy something. I write a note. I'm talking about why I bought it in a small little note. If you want to get deeper in any of it, you can always comment under it. I've had convos with other people about different stocks and went deeper. And it's a way to see things as I buy it live. So it's a little cooler than YouTube. I'll throw a video and we'll get deep into things, which is awesome. I love YouTube. But it's not immediate. You're not seeing it the moment I buy the stock. You're seeing 3 days after I bought it, when I decided, okay, I have time now to spend 3 hours putting a whole video together. So stock is up, by the way, 394 right now. So everyone who was worried, we're back 394, another 2% up after almost 5% day. So that should feel good. You guys should feel good about that. And I like this stock. I'm going to be listening to the earnings call at 5 o'clock, listening to management. If you have any questions about the stock, you can write it in the comments on this channel. This is going to be posted. It's obviously live, but it'll be posted onto the channel. You can write it. Obviously, you can write me now any questions, but if you come up with questions later, if you listen to the earnings, call, which I highly recommend you do. In order to do it, you just go to, I'll show you on the screen. You write R for any single company. If you write the stock ticker, so RH, and then you put a space and you put IR in Google, that IR stands for Investor Relations. It will always come up their page. So as you see here, RH Investor Overview, you click it. You can do that with any company pretty much. Right in the front, it's going to say here, listen to the webcast. It's in 15 minutes from now. I highly recommend it. You click that, you put in some info, and it opened it in a different tab. That's why you guys aren't seeing it. Put in some info and you can listen to the earnings call there. I highly recommend you listen to it. So you always get some good info listening. Are you listening to the call? Please share your thoughts. Yes, I will listen to the call. It's at 5 o'clock from my understanding. I'm just going to double check that I didn't misread that earlier. 2 p.m. Pacific, so 5 o'clock Eastern. So the call is going to be in 15 minutes. I'm going to listen to the call. If you guys listen to the call and have questions about something that was said in the call, comment it in this video. It's going to be on the channel. I'm happy to answer it. If you guys liked, definitely let me know. Also, comment if you enjoyed the live stream, if you think we should do this more often with other stocks. If there's any stock that you guys want me to live stream the earnings and go through the earnings with you guys as they're happening, I'm happy to do it. Just put it, write it in any of my videos as a comment. The channel, are you asking my YouTube channel? It's FFM Research. So FFM and then RESEARCH Research. Sorry. I really appreciate that. Thank you so much. Really appreciate it. And I appreciate that, a good amount of you guys stayed on for this entire thing, which is awesome, because you could be doing anything you want. And you're taking the time to invest in yourselves, to educate yourselves, to go through an earnings report. And that's, to a lot of people, this would be super boring. So the fact you guys are still here and made it through the end is really, really awesome. Good for all of you. And that pretty much sums up the rest of this. Thank you. Detailed oriented. Thank you so much. I try to make sure that I go over everything that I'm thinking in my head, and try to answer any questions you guys have in simple, easy to understand. So if there's anything else, I'm going to throw up, just see how the general market's been. We're going to end this in a second or so, but if there's anything else anyone wants to ask or anything before I jump off, we've been on here for an hour and 18 minutes. You guys are all, literally, you're all awesome. Some just random news, which is cool to see. Robinhood, for those that are using Robinhood, I have a Robinhood. I've used it. I still have it just for occasional things, but I'm mainly using E-Trade and Public. But for those using Robinhood, that was a huge jump today. 24% in the day it went up, because they are going to be extending their hours. So you'll be able to trade extended hours from, I believe, 7 a.m., I think, till 8 p.m. So really great for Robinhood. It's one of the stocks in my public account. there was a couple big winners in my public account. So public account Rivian up 17% today. So how do we communicate with you? So obviously on the YouTube channel at FFM Research, you can communicate, no issue there. If you want to send me an email about anything specific or anything, my email for this channel and for anything like stock related and other business wise is frostforestmanagement@gmail.com. So you can, you're welcome to send me an email. And my Twitter, Twitter is actually probably the best way. My Twitter is Alexander, my personal Twitter, which I write a lot of stuff on. I have a Twitter for FFM Research, which is FFM Research. And I have a personal Twitter at Alexander Baton, my name. Last name spelled again, Bittan. Follow me on Twitter, DM me, happy to answer anything. Write me out on Twitter. I check my Twitter every single day. I'm not a big fan of the company, but big fan of the app. Yeah. Oh, I didn't even realize I'm live streaming on Twitter. Oh no, that was YouTube. All right, guys. I'm gonna hop off. Thanks so much again, and I'm gonna end this stream, and let's do it again.